We're noticing a trend here. Another AI update, another crypto market pump. And that's all of crypto, but more specifically, the Chat GPT 4 launch has sent specific AI tokens soaring yet again. And so we have to ask ourselves, is AI mimicking meme token phenomena that we've seen now for some years? Or is there some real fundamental growth that is happening here that's leading to these double-digit, in some cases more, price surges? Our Altcoin Buzz research team dug deep into crypto AI's landscape and found 4 artificial intelligence crypto tokens that are worth watching out for what they're trying to do for their use cases, but also for their tremendous growth potential. So guys, here are 4 crypto AI tokens that you simply must have on your altcoin radar. Welcome to the channel. My name is Maddie. This is Altcoin Buzz. Now, whether we're talking about artificial intelligence or any other crypto token, of course, I wish you the best of luck if you choose to invest. But look at me. I am certainly not a financial or investment advisor. And so by extension, this video is not official financial or investment advice. All right, let's launch right into the list here with a familiar favorite at number 1. Our first token is the Graph, ticker GRT. It's one that we believe has huge potential because GRT is also a part of our 50x monthly portfolio. We like it for a lot of reasons, but the project's plainly stated goal is to make blockchain data more easily accessible. The markets have been doing well, as has our portfolio. If you haven't checked out that video, I'll link to that in the description below, or you can click the card that's popping up now. As I said, we like the Graph for a lot of reasons. It's a decentralized open source protocol. It uses distributed ledger technology to aggregate data, but without involving third parties. And the Graph represents a global API for organizing, indexing, and querying data. And then this data is processed and made available using the GraphQL programming language. Now, the Graph indexes and queries data the way Google indexes and queries data from websites. Indexing blockchain data isn't always an easy task, but the Graph has a unique approach that simplifies it. So the Graph uses AI, artificial intelligence, to organize data into smaller so-called subgraphs for efficient querying. And subgraphs are open APIs. They have the details of how data is indexed on the blockchain. The Graph was launched a few years ago in 2018 by Brandon Ramirez, Yaniv Tal, and Yanis Polman. However, the project's token was only released during its mainnet launch a couple years later in 2020. The Graph currently supports data retrieval for 31 Ethereum-based dApps, and some of these include Uniswap, Decentraland, Aave, and Balancer. Of course, there are many more as well. It's a project that offers a lot of very impressive use cases. Here, for example, are just some of the services that can be accessed using the Graph. So we have secured and decentralized data access, seamless curation for AI models, data, machine learning, and AI algorithms, and the facilitation of AI-powered dApps. Let's talk a little bit about the GRT token and what it is. So this is the Graph's native token, again, ticker GRT. Now the Graph uses the ERC20 token standard since it is based on the Ethereum blockchain. And the GRT token experienced impressive growth at the start of the year. Just take a look at this chart here. I'm going to tell you why, though, in a minute, at least my hypothesis. But just before we get into that, let's take a look at this data from Into the Block, which is a crypto research firm, because these numbers demonstrate something pretty impressive. More GRT tokens are leaving exchanges than those transferred from wallets. This, by the way, is within a 1-week period. So this indicates an increase in HODL positions and more buying pressure, obviously. But that begs the question, why are people buying GRT? And what does it do? GRT has utility within the Graph's ecosystem, and it is mainly used for the payment of fees. Now, the Graph charges a fee for queries, of course, but GRT's increased sales aren't all about its utility. The Graph collects an increased amount of data. It also makes these data available to users, so there's been more demand for the platform's services. And the use of GRT is likely to grow as the Graph continues to broaden its networks and collaborate with more dApps. Decentralized platforms are also becoming more popular, and of course this is because they offer greater transparency than do centralized services. At the time of this recording, GRT is trading at 15.13 cents with a market cap of just over $1.3 billion. All right, moving right along. Next up at number 2 on our list, we're looking at Oasis Network, ticker ROSE, R-O-S-E. Oasis, we've talked about them before, you may be familiar, but in case you're not, is a layer 1 blockchain that places a pretty high value on scalability and privacy. So this blockchain enables developers to create privacy-focused applications, and it separates the execution of smart contracts from the consensus mechanism process entirely. It also offers a safe design with high throughput at a low cost. Oasis Labs is behind the Oasis network, and Oasis Labs was founded by Professor Don Song. The Oasis network aims to offer infrastructure for scaling apps. That's the whole idea. And this way, it really powers a variety of Web3 applications. Oasis networks build DeFi apps and cross-chain interoperability, and users can move apps like Uniswap from Ethereum to the Oasis blockchain if they so choose. This is thanks to the network's backward compatibility with the Ethereum blockchain. When you think about Oasis, privacy should come to mind first and foremost, because the Oasis network heavily focuses on privacy as a major priority. And as we know, privacy is a big deal, at least in my opinion. I'm sure in your opinions as well. And Oasis directly addresses the issues that are being brought up by artificial intelligence. Privacy, as you know, is not one of AI's best features, but Oasis leverages the resources of its partners and its infrastructure and provides privacy-based solutions. In a nutshell, Oasis is focusing on offering Web3 a privacy layer. It also enhances the confidentiality of existing dApps on any EVM network. We feel there's a strong chance that Oasis could trend, since we all know there's a lot more hype around AI currently. But that being said, AI could be risky if it violates users' privacy. If there's a collective uprising, something unforgivable happens, for example. Maybe the AI would provide false information, and that's exactly what Oasis would intend to fix. Oasis plans to solve the possible privacy challenges of AI in a way such that AI becomes more ethical and safe. And so to bet on Oasis is a bet that lots of developers are going to use this platform for its privacy features. The bigger the crowd, of course, the more value that ROSE, R-O-S-E, is going to accrue. So as I just mentioned, ROSE, R-O-S-E, that's the native token of the Oasis network. It's used for transactions, staking, as well as delegation. And as of this recording, it sits at just over 6 cents, so $0.06, with a market cap of just over $340 million. Moving right along at number 3 on our list here, we're looking at Render token, ticker RNDR. For context here, the future is definitely going to require improved rendering features. This process is difficult and necessitates better resolution, and so Jules Urbach found a way to address the issue. He developed the Render network to democratize GPU cloud rendering on a global scale. And the Render network therefore creates massive opportunities within Web3 because it links users searching for render jobs with individuals who have free GPUs to handle them. Users will receive the RNDR token, the native utility token of the network, as payment in return for their contribution. Render is powering the next generation of digital products in the metaverse, and the project has changed the procedures for rendering and streaming 3D environments already. Render has a peer-to-peer network, and really it's one of a kind because it enables individuals and organizations to cheaply and effectively use underutilized computational power, latent processing power, if you will. So effectively, Render addresses 3 major concerns for its end users: IP protection, optionality, and scalability. And all transactions on the Render network are made using RNDR, which is an ERC20 utility token. And so creators can use it to pay node operators for on-demand GPU computing. It has a total supply of 536,870,912 tokens. According here to CoinGecko.com, the RNDR token has risen by over 200% over the course of the year so far in 2023. It is now trading at $1.37, up from just 40 cents, by the way, on January 1st. So we've seen a pretty nice rise in these last couple of months, 3 months or so. The most recent increase came after voting occurred within the Render network, and the community voted to adopt a new burnt and mint equilibrium, a BME model. And it's a model that caps net emissions. So the new model would allow artists to burn the necessary amount of RNDR. They'll receive non-fungible work credits in return, and these are distributed to node operators. Render is planning to make RNDR a commodity and a deflationary asset with the BME model, and it's probably no surprise, therefore, that investors are jumping on the RNDR bandwagon in a pretty bullish manner. There are definitely some other factors also contributing to the growth of Render here. Last year, for example, the Apple App Store listed Octane Render. Now, this is the app that allows GPU holders to take part in the Render network. And additionally, Revolut, which you may know is a payment company, they added the RNDR token to their platform. So Render already has a pretty good amount of visibility, which will continue to work in its favor and increase its value. Render also has a couple of impressive partnerships. And in addition, this is a bit of a curveball, but some top movie studios have seemingly embraced this project, in addition to Microsoft and Google, who are on board. All right, last but not least, we're looking at our fourth project for the day, our fourth AI token that we feel has massive potential. It is Ocean Protocol, ticker Ocean, O-C-E-A-N. And this is a project that recognizes the value of data because Ocean Protocol is aiming to make data accessible to everyone. And so this way it lessens the monopolistic grip of certain companies in the data and AI fields. So that's a pretty noble ambition. And the Ocean Protocol enables transactions using ERC20 smart contract tokens. Ocean Protocol also offers data governance and encourages network expansion. The platform ensures that every step is a step toward decentralization, and the Ocean token plays a huge role in the protocol. It allows users to stake claims on data for curation or to buy and sell data if they want. In summary, the Ocean Protocol allows users to access a data exchange protocol with ready AI models, a data access platform that supports NLP, predictive analytics, and image recognition, and an AI development protocol keen on blockchain-focused decentralization. So there you have it. We like these 4 crypto AI tokens right now. Make sure you go back and check out our previous AI selections if you haven't already, but this is a space that is undeniably picking up. Let us know what you think about these selections. If we've left any of your favorites off the list, be sure to comment below. Let us know what you want us to cover in the next video.